and human resources. 1 minute. Okay. Including branch banking, branch operation, planning department, research and statistics, and human resources, thus gaining extensive knowledge on functioning of various verticals of banking. Completed postgraduate diploma in management with specialization in systems and operation and marketing from School of Communication and Management Studies, Cochin, completed Bachelor of Engineering in Mechanical from Tamil Nadu College of Engineering in the year 2005. He has other qualification includes completed, he is a certified associate in the Indian Institute of Bankers, CAIIB, by the Indian Institute of Banking and Finance, certified in Treasury Management and Financial Planning by Indian Institute of Banking and IIBF. Is also completed certified course on mutual funds and insurance. Today is going to make a session on the importance of proper financial planning, need and advantages. So the takeaway of today's session is understand the importance of proper financial planning and demystify the myths of the financial planning. So with this introduction, I introduce Frederic to start the session. Go ahead.
Thank you, Mr. Paulos, for that introduction. And thank you, IAI3, for giving me this platform to share a few glimpses of knowledge on financial planning. So, as the title goes, a better and simplified approach towards financial planning. So there's a lot of subjects involved in financial planning. So this is basically, I want to introduce a simplified approach towards financial planning, though it is a very complex and there are a lot of steps involved, and it is not a generalized financial planning. It is specific based on the goal, based on the individual's capacity. So today we are limiting the scope of the presentation to a simplified approach, how we should go about financial planning. So let's go directly to the presentation. So the very basic definition of financial planning, it goes like this. It is the process of meeting your life goals through the proper management of your finance. So if we talk about any financial planning, it's talking about the future. So if you do something, if you save something for a certain period of time, you will get a lump sum, or you will be able to meet the financial requirements in the future after a certain period of time. So it's always talking about the future. So the question is, are we really talking about the future, or is it the present we are talking about by doing a proper financial planning? So why is it talking not only the future? Because I was attending one session through IAI3. So there was a discussion on from the youngsters' point of view. There is a resistance from the youngsters saying that the financial planning is not for the youngsters, and they're all talking about it's a future thing. They just started the career, they are in the early of their 20s, and they've just started earning. So they are not really much interested in talking about the future. So is it really the future? So it's actually, to me, it's a big no. It's not about the future. The new definition of financial planning, it says that you have to live the present, save as little as possible, and with that you have to create a wealth for the future. Because if you, all these three parameters are very important. Why? Because if you save more, then it will affect the present lifestyle. So if you want to convince the youngsters about the financial planning, so you have to talk about the more importance towards the live the present situation. Because unless you live the present, I don't think we will be able to convince any youngsters who are in the just started earning. They will not be much interested in saving and creating wealth for the future. But if you show them, you actually have more amount to spend you need to save only as little as possible so that you can create wealth and you can meet all your future financial requirement step by step. I think that would be the beginning of any financial planning. So it's not about the future, it's all about living the present. So now we'll go to the basic financial pyramid. So you can, I would request everyone to focus on the left-hand side of the presentation, where any financial pyramid, the base will be the insurance. And then next comes the liquidity. So we'll go one by one in the following sessions. So the base, as I mentioned, it is insurance. Then it comes the liquidity. Then it comes the investment. Then comes spend. So any financial planner, they will explain you what you left after allocating in the first three pyramid, then you can spend. So again, I would like to recall the earlier discussion. So if we show this pyramid to a youngster, so he or she will be much worried that he will be left only the top portion, that small portion of the pyramid, he or she will be left with spending. So which nobody would be really interested. So we can show them the right-hand side of the financial, the allocation period, which actually inverted pyramid. So you can just correlate both the screens on the left-hand side, on the right-hand side. So though the base of any financial pyramid is the insurance, but you need to allocate this. The right-hand side is the fund allocation. So suppose you are earning starting in your career. So suppose you are 25 years of age and then you just started earning. So though the base of any financial pyramid is insurance, you need to allocate a very small portion of your monthly income towards insurance. Then it comes the liquidity. The liquid amount, what I mean here is that the corpus you need to have in case of any emergency. So we will go one by one into those aspect of this pyramid in the coming sessions. And then it comes the investment part. Then the major allocation should be on the live the present. So this will be slightly more attractive when we present it to the youngsters. So my point here is that the importance on various aspects of financial pyramid is actually different when it comes to the fund allocation of that pyramid. So we should give the confidence to the youngsters that if you do a proper financial planning, you can live in the present and you need to save only as minimum as possible so that you can secure your present lifestyle and also the future without any complications. So we'll go to this pillars of the pyramid one by one. Yeah. So as I was talking about, this comes the insurance part of the financial pyramid. As I said, this is the most important and most basic part of any financial planning process. So I just want to understand from the group that what do you mean by insuring your life? Can anyone just volunteer to explain me what exactly they understood when it comes to the insurance, life insurance or health insurance? Can anyone volunteer?
Yeah. Frederic, when we talk about insurance, that insurance has got a portfolio itself. The first thing is life insurance.
Yes.
In the life insurance, we need to ensure that we are adequately insure our own life so that in case of our untoward incident, our family get protected. That is number one.
Exactly.
Number two, second is, that health insurance that we call it, for in case of some accident or, some sort of hospitalization, that insurance will take care of it. That is two.
Yes.
Third is, our, assets, that is especially the house property and all, so that in case of some untoward incident like earthquake and all, that insurance company will reimburse the housing, that property what we have.
Correct.
Third is, household insurance. That is, for example, that whatever, suppose we have got worth 15 lakhs worth, assets in our house, like furniture, TV, washing machine and all, they are also insured so that in case of some theft or some fire, that is protected. Then we have got car insurance. So, there are so many other insurance. So all this insurance put together in a portfolio is called insurance portfolio. I'm
Yes.
explaining this because we have done all that for my family, my son's family, my daughter's family. We have done all that. We are adequately insured in respect of all this area.
Yes, yes, yes. Actually, you have articulated it in a very detailed manner. So here, when we are talking about a personal financial plan, the most important aspect of any financial planning, the pyramid is health and life. It comes the first, and the rest of things are actually like you said, household insurance, car insurance, all comes next. So we are talking about the base of the financial pyramid. And again, you mentioned here is that insuring for adequate. So this adequate, what is actually the adequate amount? It is always debatable, and it's slightly confusing. So people used to have this idea of insuring all the future financial requirements. Suppose there's always a concept that you have to insure your child's education, you have to insure your child's marriage, your house, then everything. So that list goes on. There is no ending towards it. Actually, what exactly is the base of any life insurance? Because you cannot insure your life. You can insure your all your future income for a beginner to start with. Suppose a person in his early career, suppose if he is 25 and he just started earning 50,000. I'm just giving a small example here. Suppose he's started earning 50,000 rupees a month. So the insurance means to him that in the life insurance, in case of any emergencies, in case of any exigencies, if something happens to him, that all future inflows as his income, that 50,000 a month for the next 35 years, is at stake. So the insurance, what I mean here is that if suppose something happens to him, from the very next month onwards, his family should receive 50,000 rupees a month till the time he achieve retirement. So suppose if something happens to a person who just started earning in his in the age of 25, starting from the next 35 years, that 50,000 should come to his family. So now I just wanted to give a small example of one of the Tata Group companies. They have introduced during this Corona period. What they have done, they have come up with a very beautiful feature to their staff. What they did is that they gave a feature to their staff saying that if something happens to their employees because of COVID, if any exigency happen, that the family of that staff, they will be getting the last drawn salary for the next 10 years. It is such a beautiful concept they have brought up. So, so what I'm talking about, I just want to ask to the group again, in your career, starting of your career, could you be able to insure your monthly salary? See, suppose again, I'm going back to that same example. Suppose if you are earning 50,000 rupees a month, have you ever insured that 50,000 monthly for your life period? Have you had any insurance which would have ensured in case of your absence that 50,000 or your monthly income would have come to your family? I just wanted to know whether any one of you had any insurance plans like that. Have you ever insured like that?
Yeah, Frederic, actually, in 88, I became an insurance advisor, LIC insurance advisor. And with my financial background and with proper training, I could insure my family sufficiently. And I also shown me as a role model to many people. And I could ensure that all my friends and relatives are sufficiently insured.
Very
As you
good.
rightly said, for every lakh of rupees insurance, you have to have, for every thousand rupees income, you have to have 1 lakh. So, for example, if I am earning 50,000 rupees insurance, I need, if I income of 50,000 rupees, I have to insure for 50 lakhs. So in case of my death, my family will get 50 lakhs rupees, which will be able to take care of my immediate, starting from next month onwards, my financial requirement.
Yeah,
Actually,
that you're
now,
that you're talking about a lump sum amount.
eh,
Here, I would like to just rephrase that concept. Instead of a lump sum, What about your family started getting the
I
exact
agree.
last month
1 minute,
of?
I'll explain. In the
Yeah.
beginning, I start with that.
Yes,
Then,
yes,
as I have children, I take policies for their education, for their for their marriage. So all my needs one by one, I keep on adding, and
yes,
even that 50,000 or 50 lakhs which I talked about is a present. So
yes.
as my income now, suppose I'm earning about a lakh of rupees month,
Hmm.
so I will increase my financial the insurance amount from 50,000 to say 50 lakhs to 1 crore.
Okay.
For
Notice
example,
that.
my son has provided almost more than 1.5 crores insurance.
Yes,
So you have to understand your need. That think that tomorrow if you are not there, what will happen to your family?
yes,
So it
exactly,
may be your
exactly.
own income, it may be your child education, child marriage, or all these you have to make a financial proper finance. A good advice, insurance advisor can help you in this respect.
Yeah, correct, correct. So here I would just rephrase that concept into a very simple one. That it's basically a simple approach would be, in case of your absence, the last drawn salary, the last monthly drawn salary should come to your family on a monthly basis. Every month, say suppose your income is 1 lakh rupees, and if something happens to you for the next 35 years, this 1 lakh should come to your family without any difficulty. So here again, like I said, on the left hand side, the financial pyramid said that is the base, and the health insurance to start with at 20 lakh of health insurance and a monthly income insurance, which is the benefit which I already mentioned, that every month your monthly income should reach your family without any difficulty. So I'm not talking about a lump sum here. See, the lump sum is a different concept. So there is no end to that lump sum, like you said, 1.5 crore. See, if I calculate 1 lakh rupees a month of salary, so if you calculate for the next 35 years, it will be somewhere around 4 crores. So a 1.5 crore is enough. I'm not sure. A 4 crore, that will be costly. A 4 crore insurance will be very costly. So here, the most simple approach would be, in case of any emergency situation like this, the monthly income should reach to your family without any difficulty. So for that, you need to allocate this. If you see the left hand side, the life insurance of your monthly insurance and a health insurance of 20 lakhs to start with, you need to only allocate 3% of your income. Suppose you are drawing a salary of 50,000, you need to allocate as minimum as 1,500 rupees a month. This 1,500 rupees a month, anything above this 1,500 rupees, to me, it's actually waste of money if you are putting towards a life insurance. So life insurance as a concept, it is very specific, very purposeful. So there you need to allocate only 3% of your monthly income. Suppose you are earning 1 lakh rupees, 3,000 should only be moving towards your life and health insurance, which will ensure you a monthly salary, monthly income. That monthly income will be substituted by the insurance company for the next 35 years. And at the end of that 35 years, a lump sum of 1 crore will come to you as a lump sum. So that will ensure your all monthly inflows and all monthly outflows. So this is the allocation. So if you have any doubt on this point, so again, I'm reiterating on the one point, anything above 3% towards an insurance plan, that you are compromising the other pyramids of the financial planning. So if you have any, are you comfortable with allocating 3% towards your health and life insurance put together? I'm talking about put together, you need to allocate only 3%.
Frederic, Dr. Neeta has put a question in the chat box.
Yeah, can 1 minute, I'll just go to that. Yeah, pension plans.
Yeah.
No, I'm not talking about pension plans here, neither. I'm talking about pension plan. Actually, it's again a savings plan that will, so you can continue continue saving from your monthly income, and at the time of your retirement, which will ensure you a monthly inflow, which will take care of your retirement income. So I'm not talking about that. I'm talking about purely an insurance that suppose if something happens to you, the last drawn salary should come to your family for another 35 years. So Suppose you are earning 1 lakh rupees, you need to pay only 1,500 rupees a month. That will ensure, in case of any emergency, in case of death of the earning member, from the very next month onwards, you will get 1 lakh rupees a month to your loved ones till the proposed retirement of if you were alive. So that is the plan I'm talking about.
Okay, understood.
So that we need to, you need to keep as little as 1.5%, which will ensure this. So if you have this plan in your portfolio, it is well and good. So we will go to the next. So anything above this 3%, actually to me, you are compromising on the next aspect. You may be compromising on your present lifestyle. So we should restrict our insurance requirement, life and health put together 3%. So if anyone of if the nobody has any other questions on this plan, we'll go to the next portion of the pyramid. Because I have seen most of them don't have enough insurance to cover their monthly income. So the next portion of financial pyramid, it is the liquidity. Liquidity means you have to create a corpus of 6 to 12 months of your salary. See, actually, again, going back to the previous slide, if you have a proper life insurance for your monthly income and a health insurance of 20 lakhs by spending 3% of your income, there won't be much exigencies, or there won't be much emergency fund you will be requiring. But to be on a safer side, starting from your career, you can keep aside 10% of your monthly income. So which means here in the example which I was giving, that out of that 50,000 rupees, 5,000 a month can be keep aside so that you can up to you create a corpus of 6 to 12 months. So in 3 to 4 months, 3 to 4 years of your initial career, you will be creating that corpus of 6 to 12 months. So once you can, again, I have mentioned some avenues where you can keep this liquid fund. You can keep it as a cash. You can keep it in your SB account. You can keep it as a short-term FDs. There's a concept called sweep-in FDs, where you can link FDs with the savings bank account, or you can keep it in liquid mutual fund. So this will create a corpus for 6 to 12 months of your salary. So once you reach 6 to 12 months of salary, you can think of either moving this 10% to the next phase, that is investment, or you can spend and you can enjoy your present lifestyle. So that is up to the individual's nature. So we will go to the next slide. So next comes to the investment portion. Here I have mentioned the next portion as investment in the financial fund allocation pyramid. You should invest 25% of your income towards investment. So again, going back to the same example of the person who is earning 50,000 rupees, you need to only invest 12,500 rupees a month. So trust me, if you invest it on a proper avenues where you can beat the inflation, that ideal portfolio allocation should be slightly complex, and you have to approach a proper financial planner to do that. So if you can ensure 10 to 12% of return from this 25%, trust me, all your future financial requirements in terms of your kids' higher education, their marriage, so your personal financial, like Neeta was mentioning about the pension plans. There is nothing called pension plan. If you invest in these investments for a period of 30 to 35 years, trust me, all your future financial requirement, like I said, your higher education of your kids, your kids' marriage, your personal retirement fund, all will be taken care. Only you need to invest 25%, which includes a categorization of portfolio allocation of FDs, bonds, gold. You can think of equity linked savings scheme. You can invest a small portion in mutual funds, mutual fund debt and equity. You can try in direct equity only if you are well versed in equity research analysis. Then the most most complex and most risk asset, that is property. So you can differentiate, you can just invest in a segregated manner to in all these avenues. So next comes the most important thing, that the spending. So once you do the bottom of all this inverted pyramid, like so all including your insurance, your liquidity, and then your investment, all put together, you need to allocate only 38% of your salary. The next 62% you can spend. So I have not mentioned any avenues here. So whatever you wanted to do, you can do that. There is no restriction. You can have a better lifestyle by spending 62% of your monthly income. I think if you show this inverted pyramid, and if you show them, you can actually spend 62% from your monthly income starting from your first salary. I think most of the youngsters would be interested to do that. So the only thing is that you need to focus only on the bottom of the pyramid, though it is slightly inverted and slightly narrow, but you have to be very careful in allocating, so you can enjoy by whatever the grocery you want to purchase, what are the gadgets you want to purchase, what are the holidays you want to enjoy. So you can just spend 62% without any regret, because most of the parents, they will insist their kids to save more, invest more. So most of them will become slightly rebel to actually think of financial planning, because they will be ending up with no present lifestyle. So that is not the case. If you properly do the bottom of this pyramid, then it will ensure all your present lifestyle to be more beautiful and more enjoyable without any regret. So here I think I have cleared the financial pyramid allocation, and then I just wanted to demystify some myths about financial planning. Mr. Paulos talked about the insurance planning. He slightly extensively spoke about insurance planning. So here, one thing we need to understand, that insurance planning is not the only financial planning. Insurance planning, though it is the base of any proper financial planning, it is the most important aspect of financial planning. It is the base, but it should not be misinterpreted as that is the financial planning. Financial planning is much a wider approach, but it is the basic, and you need to allocate only the as minimum as possible, because that you are not earning anything in your lifetime. You are securing your family's future, so it has to be as minimum but adequately insured. So if you approach any chartered accountant or any tax consultant, you will have a feeling that tax planning is a financial planning. So I hope from the previous slide that is not the case. Tax planning is also a small portion of financial planning, but not the complete aspect. And the third misconception is that I am too young to think about financial planning. But trust me, this is the age where everyone has to focus on financial planning, because as I told you, you should give the your savings to multiply. Once you save it in your younger age, the starting from your the first month salary, you need to allocate only 25% of your monthly income. That will ensure all your future financial requirements. So and one thing actually I have missed, it's confusing investment with FP, financial planning. So you can see in many of these banks, they will give you a product called wealth management solution. So wealth management is also not actually related to financial planning. Wealth management may be true. It is for the rich. They have already created a wealth, a lump sum, so they have to manage that. But here, what we are talking about, financial planning to create that corpus. So once you create the corpus over a period of time, 10, 15, 20 years, then you can think about wealth management. So wealth management is not financial planning. So most of the banks would be interested to do the wealth management, but actually financial planning is the base for any monthly income earner. So I think I have demystified this common misconception. So if you have anyone have any other misconceptions about financial planning, you can just tell me. Or if you are confused with pension plan, retirement plan, anything, see, there is nothing called retirement plan other than some insurance companies talk about it as a retirement plan. So there is nothing like a retirement or a pension plan, though in the name it is there. So any investment which I talked about, that 25%, that should ensure your all future requirements, including your pension. So there's a famous sentence: "He who fails to plan is actually planning to fail." So this is a very good sentence. No one actually planned to fail. Everyone failed to plan. So a plan is very important, especially for those who starting their career. So starting from his first income, there should be a proper plan, and we should stick to that plan. So I hope now everyone can have a financial plan. You can start prepare your financial plan based on that pyramid which I have showed. So make sure that you need to allocate only those in percentage, so that you need not compromise any financial future requirements. So you have to build your portfolio, and you have to do the fund allocation based on the inverted pyramid and the actual pyramid which I have shown. But there is something which I need to everyone to related to some terms and conditions there before you actually do your financial planning. So you can go through this terms and conditions which I have displayed here before you actually do the financial planning. Is it visible to everyone?
Of course not. It's too small to read out.
Yeah, exactly. Exactly. I think if you can read, I think you can go ahead with the financial planning by your own. And if you can't read, I would rather suggest please consult a good financial planner before you take any personal financial decision. Of course, it's not a rocket science, but it's a professional service. You don't have to compromise on that. So any wrongdoing in the initial stages of your career, then it will lead to a lot of compromise on your future requirements. So I've just made it intentionally very small, so that I just want to give this message saying that, of course, it is not a rocket science, but people have to approach a proper financial planner. I can give you one small example. When I'm from Kerala, and when I shifted to Mumbai in 2016, I had a small fever, and then I went to a doctor in just near to the place where I was staying in Mumbai Central. So after consultation, he gave me some set of 3 to 4 medicine without any prescription. So he handed over me in small pouch of plastic this thing. So I really wondered why this doctor is giving these tablets in such a small packets without giving a proper prescription. So I asked him, why you are giving me like this? I need a proper prescription. So what he was giving, what he was justifying that his action, that here the people, once they approach the doctor for a fever, so next time onwards, if they give any prescription, they will not come to a doctor. They will just follow what is already prescribed, even though there is slight difference in the symptoms, but still they stick to that. So here people are there is nothing called generalized approach. It's specific, and everyone's income is different, everyone's risk aptitude is different. So we need to do this individually. It's nothing called generalized approach. So it's very specific, and it's a very professional approach you need to have towards the financial planning. So just consult a good financial planner before you invest, before you save, before you allocate any amount into any of this instrument. Because and not only at the time of investment, and every 3 to 4 years, you need to review whether it is actually proceeding or actually growing towards meeting your requirements. So it is slightly complex, it is slightly professional, so don't compromise on that quality. So with this, I would like to wind up my presentation here. So if members have any specific doubt on any of this aspect, you can ask me, or this is my email ID. You can write to me. My contact number is also shared, so you can call me. So other than that, if you have any questions to me, you can ask.
So no one has got any doubt on that. So I go to the, now it's going to be 6 o'clock. We go to the next part of it, that is vote of thanks. So I say a big thank you to Frederic for coming to our IAI3 platform. I invited him and introduced him recently to IAI3 platform. So I also thank all the participants who have joined in today's session. Our next knowledge sharing session on Tuesday is by Parul Chofla. So I will be sharing the details on first. So please join us for the next knowledge sharing session. Now I invite all people to become paid members of IAI3, because basically IAI3 introduce you as a trainer to the social media. So on social media you will get visibility and you can become a trainer. Every month we publish e-bulletin, we write, so you can contribute your article. Every month we invite articles from all the IAI3 members. And basic service what IAI3 do is we make all trainers as visible on the social media platform, because according to me most of the trainers have got a poor visibility on social media, whereas IAI3 lift you up and put you on a social media platform so that everybody get it. You can make your presentation with your details of your next upcoming session, so people will join you on your next session. So with that, I thank once again Frederic and all the participants. Thank you.
Thank you.
Thank you very much, sir. It was a wonderful session. Very knowledgeable. Thank you.
Thank you. Thank you.
Frederic. Frederic.
Yeah, thank you.
Frederic TA ലോട്ട് പോവാണോ?
TA അല്ല വല്ലതും ചോദിക്കേ.